The average price for the daily gold trading last at 1551.60 is 1557. The extreme level below that mean is 1550. It's the buy one level, and the buy two level is 1540. When the price comes down to the 1550 level, it indicates a 90% probability of the reversion to unfold. And when the signal was triggered last night at about 9:45 p.m. by trading below the average price, it activated a bearish price momentum and activated the target of 1550. And it told us that if the price comes down to 1550, we can expect a pretty much 90% probability that a reversion should unfold. And as you can see here, the market came down, met the target from 57 to 50. That was a $7 theoretical profit that you could have taken depending on how you trade, whether you trade one contract or 10 contracts, and gone neutral at 1550. The artificial intelligence identifies the trigger point when the price after the setup closes above. And in this case, it closed above it at 2:15 a.m. and it closed pretty much at 1549.90 or 1550, rounding it off. But on the next bar, it closed at this close here was 1550 and a quarter. So it activated a buy trigger point at 2:15 a.m. It unfolded, and as I said, once the target is activated on the buy, it also activates the target above. And you can see here the market moved up right into the VC PMI target of 1557 by making a high of 1556.80, which was good enough for you as a trader, self-directed trader, to use it to lock in profits. We are neutral from here, from 1557, and once again, the price by closing below the daily average price, it activated once again the target below of 1550 with a 90% probability of a reversion to occur. Once again, you see here the target being completed and the market activating a buy signal, which is what we took. And you can see the signal, the energy of the market beginning to unfold. This is a very textbook example of the reversion to the mean, with a 90% probability confirming that the level of demand that the daily algorithm has identified is at 1550. So we have our position in place, structured in place, long at 1550.50. My stop is 1550. My target is 57. Once we get to 57, the daily would go neutral, and we'll look at the market action again and see what the market does. If we take a look at the right side of the chart, the weekly average is at 1572. And the buy one level, or the extreme below that weekly average, is at 1530, as you can see on the chart. The buy two level is at 1499. The extreme level above the mean target is 1602, and the sell two level is 1643. The way the artificial intelligence interprets the market by using the weekly signals is that because the price closed below the weekly average, it is in a bearish price momentum. And the target activated is the buy one level at 1530 unless it negates it by closing above 1577. But the integration of the daily signals with the weekly signals, as you can see, has identified the daily level of support starting at 1550. The buy two level at 1540. And on the daily, you're looking at the 1550 mathematical probability of 90%. The daily is at 95%. So what this is telling me, the artificial intelligence is saying that we have a very good area of support on the daily with about a 90-95% probability if the price activates the signal that this is the area where we're going to find buyers. At the extreme, we use the weekly below, which is that 1530. So the levels of support are 1550, 1540 daily, and 1530 weekly. I would say that according to the artificial intelligence, if the price is able to come down at 1530, I would say that it probably would be the best buy that you're able to make, with the highest probability combining the daily and the weekly for a reversion to unfold. In the meantime, the daily signal is long. We're long at 1550. Our stop is 1500 on a close below using the 15-minute bar. Our target is 1557.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VC PMI, is an automated AI trading system developed and tested over a decade. The VC PMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VC PMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC PMI algorithm. The VC PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC PMI? The VC PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.